Well, welcome everybody. Welcome to Moving Markets. Thursday, June the 10th. Very glad, or excuse me, Thursday, June the 11th. Let's get the date right for starters. Glad to have you here. I guess I should consider it something of a victory, for lack of anything better to call it. We're only starting up 10 minutes after the hour today, instead of being 30 minutes after the hour or 35 minutes after the hour. That seems to be the way it's been. Just one technical issue after another. Today it was the sound again. Just absolutely ridiculous how off that sound was. I couldn't get a microphone to sync, and then I couldn't get the actual program to start up. But hey, we're here. We're live. Like I said, we're just a little bit behind schedule. That's all. Not a big deal. What a day. What a day. Did you watch the market sell off today? I mean, we woke up to futures this morning pointing down 900 points. And then in that first 30 minutes that this is on the Dow Jones Industrial Average, of course, that first 30 minutes that the market was open, it looked like maybe things weren't going to be nearly that bad. I think in the opening minute or two of the market, the Dow dropped, what was it? 940, 950 points. And then within a half an hour or less, we were only down about 700 points, maybe a little over 700 points. And it was a swing to the positive direction of maybe 200 to 250 points. And that's a big deal. Even with it still being down 700 and some, or 700 and some odd points, the fact that it was up 200 points from where it started in that early movement of the market was certainly a good sign. But then about 1 hour in, it started to dip and things started to go down. And from there, it was just a steady progression down until it finally leveled off. And the Dow Jones finished today down 1,861.82 points, 6.9% to the downside. The S&P finished down 188 points, 5.9% to the downside, and the Nasdaq down 527.62 points, 5.25% down. The VIX, in the meantime, was up 13 points today, up to 4069 for a gain of almost 50%. And it was ugly today. This was the first really, we've had some days since the recovery started, since we reached a tipping point or we bottomed out on March the 23rd. We've had a couple of days that have had some pretty good size losses. March 31st, pretty good size sell-off. April 1st, pretty good size sell-off. April 7th was one of the more severe ones. We opened on the Dow at 23,537 and closed at 22,653. That's only a 900 point drop approximately. I think that was the worst single day we've had. Well, maybe if you go back to April 1st and you consider where we closed the day before, on March 31st, we closed at 20,900. And on March 31st, we closed at 21,917. And on April 1st, we closed at 20,943. Even that's only 1,000 points. I say only 1,000 points because compared to what happened today, 1,800 points to the downside. I mean, that is a massive swing to the downside. If you're into any kind of technical charting, you could pull up a technical chart of the Dow Jones Industrial Average, and the three indicators that we follow the most are the RSI, the Relative Strength Index, the 5 and 20-day exponential moving averages, and the MACD. Today's move down by itself pulled the RSI into a technical bearish crossover. It finished at 48.21. Anything below 50, it means it's crossing over into bearish territory. The 5-day moving average would still have to dip a little bit farther to cross under the 20-day moving average, but the close today finished well below the 20-day moving average. And the MACD, the converging averages on the MACD came right to a touching point where even a fraction down tomorrow, and it will be an outright bearish technical crossover. Uh, and you're talking about only, you go back 3 trading days ago. In fact, you go back to Monday and Monday's close, and the RSI on Monday finished at, what was the finishing point? Up around 76, 76, 77, 78, somewhere in that neighborhood. I mean, that's 26, 27 points into overbought territory. We've gone from overbought territory into bearish technicals on the RSI just in 3 days of trading, with the bulk of that coming today. Ugly day. There's a couple of theories being floated out there on why things move down, and that's really the point of this program, moving markets. What was the cause of this sell-off today? Some of it was panic, no question. Some of it was algorithm trading. For those of you that may not know, algorithm trading, you've got people that work at different funds, different, it could be at someplace like JP Morgan Chase. It could be at someplace like Goldman Sachs. It could be a smaller brokerage. It could be a large hedge fund company like BlackRock. I mean, there's people that are employed by these places, computer programmers. I'm sure they're brilliant people. I'm sure they're incredibly smart. They write algorithms that will go online and search the web. They'll kind of crawl through the web looking for financial related headlines and looking for keywords and key phrases, several keywords that exist together within a paragraph or a sentence. And based on finding these key phrases or these keywords, it will trigger automatic orders to sell out of certain stocks, or to sell out of certain funds, or to sell out of a hedge fund or a mutual fund altogether. And the problem with algorithm trading, from the standpoint of someone like myself, who makes educated decisions on what to do day in and day out in the market. The problem with algorithm trading is, once that algorithm is put out there, there's no one at the wheel. It's like putting a car on cruise control and going to sleep. There's no one at the wheel. And it may be that on a straightaway with a perfect alignment on a car, or with some of the technology like a Tesla that will keep you between the lines, you might go for a good long way with everything being great and everything doing exactly what it's supposed to do. And then something can happen where there's no one at the wheel, so to speak, and you can find yourself upside down in a ditch with dead people, or people severely injured, or other people injured. I mean, it's a crash waiting to happen. What happens on a day like today is algorithm trading begins, and it triggers off certain orders. Today, what triggered the algorithms were comments made yesterday by the Fed. The fact that the Fed, and what happened is, it didn't have a huge impact when Jerome Powell spoke yesterday. There was not a huge immediate impact on the stock. In fact, initially stocks jumped up and the Dow went into positive territory for a little while. Then it turned and fell and slid off, and there was a little bit of a sell-off going into the close. That was kind of disappointing, but it wasn't a horrible day yesterday. Dow down about 280 points yesterday. Then in the afternoon and the evening, articles started hitting the internet. You started getting articles written on CNBC.com, on FoxBusinessNews.com, on Bloomberg, on Drudge. Some non-financial places probably wrote some articles that had to do with the Fed's decision. And the focus of a lot of these articles was that the Fed is far more pessimistic. Jerome Powell's comments were way more pessimistic about the time frame for a full recovery than what the president has been telling us, and what the administration, people like Larry Kudlow and Steve Mnuchin, guys like this that are in the administration, the president himself, have been saying, look, we're probably going to have a pretty good third quarter and a fantastic fourth quarter. We know second quarter is going to be horrible. We know the markets took big hits and the economy took big hits through the month of March and through April. Even though the stock market began to recover in April, there were still a lot of people losing jobs, a lot of places shutting down. There was still a lot of bad stuff happening through the month of April, and that's the first month of the new quarter, second quarter. So you've got the president and his administration and spokespeople for his administration, economists, Secretary of Treasury. They're out telling us in front of cameras that third quarter is going to be a major improvement. Fourth quarter is going to be fantastic. And 2021 could be one of the best years our economy has ever had. Okay? They might be right. They might be wrong. We don't know. These are projections. These are speculations. These are hopes. We don't know. Then you've got Jerome Powell coming along yesterday and saying, hey, we think we're not going to see a real complete recovery from what happened with the COVID-19 pandemic and the mandatory shutdown by the government. We're not going to see a real recovery from that until 2022. The Fed talked about keeping rates low all the way through 2022 because they don't see things fully recovering prior to that, at least not getting strong enough to the point where they might have to raise interest rates again to keep inflation in check. Now, those are very contrasting views. Jerome Powell may be right. The Fed may be right. They may be wrong. We don't know. It could go either way. You've got these two completely contrasting viewpoints, and what happens is the algorithm trading starts picking up on these key phrases. And instead of someone being at the wheel and someone being able to say, all right, the Fed is saying one thing and the president is saying another thing, and the Fed may be right and the president may be right, and the truth, as is oftentimes the case, may end up being somewhere in between. That's probably what happens, is that you end up somewhere in between. And so, but here's the problem. You've got Skippy over at JP Morgan, who is 27 years old, has a degree in computer programming and knows how to write these complex algorithms. And he went to Cal State Berkeley, and his mind got poisoned by a bunch of moron liberals in Cal State Berkeley. And instead of just looking at data, instead of just looking at information and writing an algorithm that takes everything into account, Skippy is going to write an algorithm that ignores any article that references the president or the administration, Steve Mnuchin, Larry Kudlow, Peter Navarro, some of these other people that are in the administration that deal primarily with financial side of things. Skippy's going to write, because he's anti-Trump, because he's a young, dumb liberal, and doesn't know any better. He thinks the government has an endless supply of money and doesn't consider that it's his tax dollars that are being spent to take care of every little thing that every politician wants. Not getting any of that and having a severe bias, he writes an algorithm that's going to ignore anything positive coming out of the administration. And the focus of the algorithm is going to be on everything negative that is said by anyone outside the administration. And so when the algorithm starts picking up on these articles that are written, instead of there being a human being there with a logical brain, with a rational mind, who can say, all right, what we've got is two conflicting viewpoints, two conflicting predictions of what's going to happen to the economy, and neither one of them is necessarily wrong and neither one of them is necessarily right. So probably we shouldn't start this massive selling spree based on what Jerome Powell said. The Fed's been wrong plenty of times. Nor should we necessarily start some massive rally of buying because Donald Trump says we're going to have one of the best fourth quarters in the history of the country. We don't know if we will or not. But anti-Trump Skippy is out there writing the algorithm and then going to sleep at the wheel. And there's no other adults in the room. There's no one else to look over his shoulder and say, hey, dummy, wake up and take the wheel back. Or to say, hey, you shouldn't continually drive on the left side of the road because this is not England. You're going to get smacked by another car. How about you come back to the middle or come back to the right a little bit? So that's what starts it. That's why futures were down, because overnight these algorithms start picking up on the news and they're keying in and looking for the phrases that they're programmed to look for. And they're not programmed to look for anything that's going to put an optimistic or a positive spin on what's going on in the market, unless it comes from a source that's on their side of their belief system. Now, couple that with this is a little bit different than algorithm trading, but I believe the two things worked hand in hand today. Now you've got automated orders. Now you've got people who could care less about the politics. They're not interested in the fact that the president and the Fed have differing opinions on how fast the economy is going to recover. Instead, they're looking at technical data. They're saying we've got all of these shares of this mutual fund that's very tech heavy. And here's what we paid for these shares of this mutual fund that's tech heavy. And if we drop below X dollars, we want to sell and then look for the next bottom to get back in and get all this profit. So they've maybe gone from something that they invested $100 per share in, it's gone up to $150. And they're saying, look, if it comes back down to 130, we want to preserve that 30% profit. We don't want to give up anything more than that. So the algorithms start the sell off. And then the automated trades that are set up previously start to get triggered. And when this one gets triggered at $100 and a whole bunch of, or $130 and a whole bunch of shares sell off, the prices go down a little bit. And some other brokerage that has shares of the same thing has a trigger order set up for $125. And now this price has been pushed down to 125 because when it was triggered at 130, it caused the price to go. The price of stocks going up and down is based on supply and demand and buy and sell orders. When there's more sell orders being put into the system, the market makers will push the prices down. So one trigger causes a little more sell off, which hits another trigger, which causes a little more sell off, which hits another trigger and causes a little more sell off. And when you get a combination of these algorithms that begin the process, and then you get these trigger orders happening one after another, you end up with a day where no rational minds come into play. Nobody comes back to the wheel and keeps the car on the road. And instead, we're completely off the road and in a ditch now with 1,800 points down on the Dow and similar percentage losses on the NASDAQ and the S&P. And I'm telling you, algorithm trading, in my opinion, is one of the worst things that's allowed in the U.S. stock market. I don't think it should be allowed. I don't know I don't know if there's a right way to keep it from happening. You could have an entire debate on whether it's too much government regulation and too much interference if you tell people they can't do that. Why can't someone write a program that says if this, and this happens, I'm going to sell? That may be an infringement on their freedoms. At the same time, these algorithms it's like putting a car on autopilot that may cause, it's not just that the car is going to go off the road and into the ditch. It's that the car could cause a mass reaction of it could end up being a 20 car pileup because of one irresponsible idiot algorithm that's out there that causes this chain effect of everything else that happens. So on the one hand, you can make the argument that we shouldn't block a person from being able to write a formula that says when to buy and when to sell. On the other side, you can say, no, that has a greater impact than just their sell price of the stock or just their buy price of the stock. It affects a lot more than what's happening within their company and their fund. That ripple effect can be damaging to other people. And it's like everybody who trades on their own, who doesn't know how to write an algorithm, is at a disadvantage and at the mercy of this. So even though it seems like every passing day, I find myself almost becoming more of a libertarian. I still consider myself more of a Reagan Republican, but I almost find myself leaning more towards being a libertarian, except in certain circumstances, in certain cases where I think in something like this, where it's got the potential to do harm to other people, at least financially speaking, you've got to have some additional checks and balances. And I wish algorithm trading would go away. As much as I don't like government regulation and would like the government to mostly stay out of our business, I think this is an area where more regulation is needed. So that's really the story. Now, the one headline that was triggering some algorithms was the comments from the Fed. The other headlines that were triggering the algorithms is a sharp increase in some COVID-19 cases in some of the states that opened a little bit earlier than others. Texas got hit really hard. Texas saw a big spike just recently, last couple of days, big spike in the number of COVID-19 cases. Now, some of that is because we continue to get better and better, and we continue to get more and more people tested. The more people you test, the more cases you're going to see. Some of that has to do with opening back up. It's only natural that if this virus is still out there and people start interacting more and more, you're going to have an increase in cases. What gets underreported is that the number of cases are not overwhelming hospitals. When everything locked down back in February and March, the fear was that if we didn't lock down our society, if we didn't quarantine ourselves and stay at home, and if only essential workers went back to work, and if everyone wore masks and practiced social distancing and all this kind of fun stuff, the fear was that if we didn't do that, the number of cases would overwhelm our hospitals. And there were a few instances where some hospitals did, in fact, get overwhelmed. There were a few places where it was real touch and go for a little while. And there was such an influx of people that needed to be hospitalized because of the virus. These temporary hospitals were being put up, and they ended up largely being not used. But it's, this is what the fear was. This is why we had to lock down. Well, we've got to, even with a spike in cases, we've got a handle on that now. And the handle we have on it, it's not going to keep us from having more cases. It's not going to keep these short-lived isolated spikes, or these little localized spikes where people are gathering. We're not going to be able to prevent that, but I think we've got a handle on it to the point where we shouldn't be worried about overwhelming our hospitals. I don't think that's going to happen. I don't think we should be worried about that anymore. So a sell-off based on those kind of headlines is a major overreaction. Again, it's algorithm trading out of control. It's the bad side to algorithm trading, and I don't have a problem with the triggered trades. We, even individuals that trade the markets, oftentimes use trigger trades. We set up limit orders. We set up orders that say, if the price comes down to here, we want to sell out of this position. If the price goes up to here, we want to sell out with profit. Trigger orders are absolutely fine, and even in bulk, even in huge quantities that will push prices faster and farther. But those don't have, they're not as impactful if you've still got people at the wheel, if you've still got people in charge of what's going on, and you're not just letting a computer run things for you. So that's the story of what happened today. You've got a couple of headlines that by themselves or together should not have caused 7% loss in the Dow Jones Industrial Average, but it did because of algorithms. And I honestly wish they didn't exist. Some other stuff going on. I don't know if you've paid attention to what's going on in Seattle right now. Boy, I'll tell you, the grownups are not in control there. You've got a city that has gone so crazy, over the top liberal that the mayor, the city council, some of the state and even national politicians that are coming from Washington, the politicians that go back to DC, you've got such a crazy, over the top left. I mean, nutty left-wing group in charge there, that there's literally a section of downtown, I'm not sure how big, but a section of downtown Seattle has been barricaded by thugs and criminals, and is being called an autonomous zone, and is being called a no police zone. Some of the pictures I'm seeing of downtown Seattle, This looks like a third world Middle East country, or I mean, this looks like Serbia or Chechnya, or some of these places in Western, Eastern Europe, and some of these places in the Middle East that are these war torn, ravaged cities, and to have it happening right here in the United States, it's like what in the world have things come to? Um, at some point in time, how do you feel about the federal government getting involved? I mean, the city of Seattle, amongst other things, and Minneapolis is right there with them, and Washington D.C. is going to be not far behind, and you're going to have similar stuff going on in. I'm surprised it hasn't already taken place in San Francisco. You're going to have stuff like this going on in L.A. I mean, you look around at the big liberal cities in this country, and it is absolute chaos. These places have been controlled and run by the farthest left-leaning liberal politicians for decades, and they are in shambles. They are an absolute mess. And at some point in time, you've either got to be okay with letting the federal government come in and take control, or you can only have so much sympathy for the people that live there. And what I mean by that is this: when you look at a city like Minneapolis, I'm going to do a Google search right here. Population of Minneapolis, and I'm going to say Minneapolis, St. Paul, because they're kind of, even though they're technically two cities, they're kind of one big city, right? I mean, it's kind of the same big city. Okay, so it says Minneapolis, St. Paul, the metropolitan part. I realize it's more than just the city of Minneapolis, more than just the city of St. Paul. You've got Bloomington, Roseville, Woodbury, Maple. I mean, you've got that metropolitan area. I don't know my geography there. Those are just the names that came up on the map of some of the suburbs. Okay, but it says 3.28 million people in the metropolitan area of Minneapolis, St. Paul. What they refer to it as the Twin Cities. All right, 3.2 million. They're not all bad people. I mean, that number one, you've got to establish a base point of saying these are not all bad people. I'm sure there are a lot of good people in Minneapolis, St. Paul. Millions of good people in Minneapolis, St. Paul. And then you've got a higher than average percentage of thugs, criminals, morons. This has nothing to do with race. This has everything to do with just people choosing to be bad people. Okay, it's not a race thing. It's not a religious thing. It's not an ethnic thing. It's not a wealth versus poverty thing. It is people choosing to behave badly. People choosing to do bad things. So you've got a small percentage of those people. And then you've got your politicians who are scared to death of those people, unwilling to stand up to them. And here's the problem. Here's where the real problem is. You've got probably some really good people that, for whatever reason, whatever the reason and the logic is in their mind, they're unwilling to do anything other than continually vote for liberal politicians to run their city. And the city is going to shambles. And so even a lot of these people who are good people, but keep on voting the same morons and idiots into office who are ruining their city, at some point you got to kind of sit back and say, I don't want any physical harm to come to you, but you've kind of brought this upon yourself. You're kind of getting what you deserve. I mean, the people in San Francisco, California, who complain about the homeless population there, they complain about feces on the streets, and they complain about hypodermic needles on the streets. Most of them are complaining about that kind of stuff, but they're not voting in people who would take care of it. They're not voting in people who would do something different. They keep voting for the same jackass liberals that have been running these cities into the ground for decades now. And you can only feel sympathy for them up to a certain point. It's like, there are some good people there. And I wish my neighborhood had room for all the good people to just leave there and come here, provided they'll come here and fix their brains and quit putting liberals in power. But they don't. They don't do it. They don't collectively pull their heads out of their butts and stand up for something that is right. I look at a city like Seattle and I'm thinking, I've got friends in Seattle. I know people in Seattle. I've got students of Safe Option Strategies in Seattle. It's a beautiful city when you're in the cleaner parts. There's some really cool parts of that town. When I say it's a beautiful city, it was a beautiful city. There's some parts of that town that have some cool architecture and are really, it has the potential of being a really cool city. Same thing with San Francisco. There's some amazing architecture there. There's some really cool things about that city. But it's not a beautiful city right now because that city has gone to complete and total crap. And it's because the bulk of the population there keeps voting in the same idiots. And I can no longer feel sorry for them. I'm not wishing bad things on them. But man, Seattle, San Francisco, LA, Boston, New York, Washington, D.C. I mean, these places are an absolute mess. They are an absolute mess. And Chicago, can't leave Chicago off of there. They're one of the worst. But you people that live in those places, those of you that are conservative are either too afraid to talk to your friends and try and convince them because you know you're going to get shouted down. That's hard. Or you're unwilling to get out. Or maybe you're doing everything you can and it's an uphill battle because of the overwhelming percentage of idiots there. Whatever it is, I hope it gets fixed. I genuinely hope it gets fixed. Folks, you got to be okay. You got to be okay if the federal government at some point steps in. Don't raise a big fuss about that because by themselves, these mayors and these city councils have shown definitively that they do not have the ability to handle these problems. They do not have the ability to get this under control. Most of the people causing the most severe problems are kids between the age of 18 and 29. And I'm telling you, they need to be smacked down hard. Hard. They're like the bully on the playground that need to be knocked on their butt by enough people that they stop bullying other people. It's got to happen at some point. And if that means the president has to send in the Army, the Marines, to knock some people on their butts, you might be glad later on that it happened, even if initially it sounds appalling to you. I'm out of time. I'm going to wrap up right there. Man, I could have gone off on a number of other things. There's so much going on right now. A whole bunch of other things I would have enjoyed talking about, but we covered the most important thing, which is what caused the markets to move today. Hopefully it'll be a better day tomorrow. In the meantime, everybody have a great day. We'll see you back here. We're going to do a podcast tomorrow, but it's going to be recorded. It's not going to be live. And then we'll be back on Monday. Thanks, everyone. Bye-bye.